This video is designed to help you start a tire shop business. At the end of the video, you'll find a valuable gift. It's a tire shop business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful tire shop business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. Before starting a tire business, you should craft a business plan for the tire shop, and choose your niche, as the decision is necessary to sell online or open a brick-and-mortar tire shop. Also, plan what services and products you will offer in your tire business to your customers. One way to maximize your profits is to offer additional services like tire replacements, car washing and repairs, vehicle towing, and more. Market research. Before starting a tires business, you should research the target market of tires, its audience, and your primary competitors. Analyze the structures of businesses, case histories, expenses, how the industry is growing, and assets the startup costs. The worldwide tire market foresight to reach $300 billion by the next few years, and it is making a compound annual growth rate of 4.4%. The tire dealers in America have earned about $50 billion in revenue last year. A growing number of business owners are selling highly specialized products like passenger tires, light truck tires, and off-road tires. According to the Rubber Manufacturers Association, 10% of drivers have used tires on their automobiles, translating into about 30 to 35%. These numbers may be surprising and show how many people think that buying new is always better. The moderate-sized tire shops have minimum expenses, and have a profit margin of around 20% or more, but to open a big store today, the business owner has to invest about $1 million to purchase prime real estate in a metro area, and $500,000 for the actual building. Secure funds for your tire shop. Running a tire shop is not an easy task, as it may require getting a loan to invest in starting up a new tire shop and a tire repair shop. Your business plan will be a great tool to determine whether your brand defines the products, whether the steps are accurate or not, and to extend your tire shop business is viable. Choosing a location. Opting for an ideal location is an essential factor in running a successful tire business. Your shop should be at such a location where not so many of your competitors exist. There are some critical factors you should remember according to the rules and regulations of the U.S. Accessibility. Your tire shop should be where access to multiple roads is easy, as it will be profitable to get the target customers. Visibility. To offer visibility to your business, the tire shop should be at a prime location to be visible to everyone. Preferably, the location of the tire shop should be near road networks. Storage space. You will need a big store to keep the stock of tires for an extended period. Parking space. The majority of people like to go to stores with parking places, so you should name one with enough parking space. Equipment required for a tire shop. The overhead costs and requirements such as equipment for the tire shop are minimal. All you need is the patches and plugs and the capacity to pull the tire off the rim and reinstall it after doing all repairs. The amount and balance machine, weights, and balance of the rim of tires are the primary tools for this business. You will need jack stands and floor jacks to lift the vehicles like other automotive shops. An air compressor machine is essential to operate an air gun to plug the nuts. You can also do this task manually with the help of a lug nut wrench, but the air gun is a special tool to set the pressure specifications and tighten the lug nuts perfectly. Legal registration of your business. To make your business legal and lawful, the registration of your tire shop is a significant factor. You can contact the relevant legal authorities in your location and ask them to provide the necessary requirements for registration. Online services are also available on the internet to provide you with the legal documents required for registration. Suppliers. You will find reliable suppliers, and quality is important. Another option is getting tires is from junkyards, repair shops, and gas stations. Make sure to inspect the tires for the following issues: past repairs and physical defects, leaks, tread depth, permits and licenses. If your tire shop is a tire repair shop, you have to register its name with a DBA trade business name, also known as fictitious business name registration. If you hire employees for your business, you will need a federal tax ID and state employer ID. Another option is to create an LLC or incorporate rather than file with a DBA assumed trade name. Get the business permit to dispose of old tires. Apply online and obtain the permits for this purpose. The next part of the video is not specific to a tire shop business. Nevertheless, this knowledge is essential for success in the tire shop business, as well as in any other business. Ignore it at your own peril. Operating a successful tire shop business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these two extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice, may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers, and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling. fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business? Must be divided into two parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a tire shop business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free tire shop business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.